Welcome back. We are in conversation with Professor C.P Chandrashekhar of Jawaharlal Nehru University on the global economic crisis. We've been talking about mostly the crisis in the financial sector and measures which governments are trying to take on that. Some of these measures for the to tackle the economic crisis have been addressed at the financial sector, but a whole set of other measures are also being attempted to tackle economic issues and a kind of a 21st century New Deal, if you like, to try and stimulate the economy. How do you think these two aspects link up, and how do you think these stimulus packages aimed at the economy are working out?
The link between the financial crisis and the real economy, the way it got transmitted, partly rests in the fact that if you look at the kind of accumulation regime which we've seen in capitalism over the last 2 decades or so, is that growth, particularly in the developed capitalist countries, came to be dependent, more and more on credit-financed consumption, including housing investment, durable consumption, purchases of automobiles, credit card receivables. People were going out and spending on the basis of credit, and they were partly doing it because the speculative financial boom had pushed up the value of their assets, including housing assets, which made them feel wealthier than they actually were. And so they said that we are wealthy, so we don't need to keep too much more aside for tomorrow, and let's go and spend, including spending by borrowing. So the moment this kind of sort of interlocked system, where finance is interlocked to the real economy, and both of them sort of, blow bubbles at each other, when any segment of it trips, we actually end up with a crisis. That's the way in which the transmission operates. So there are two ways you can look at it to get out of the crisis. One is there might be people who are still optimistic that you can revive the bubble or can generate a new bubble and create a new phase of growth. Or there might be others who say that no, we should break this kind of interlocking between finance and the real economy and try and pump prime the real economy directly. So all this talk of fiscal stimulus in individual countries, a globally coordinated fiscal stimulus, is really, I think, a growing recognition that you've got to do it directly rather than just wait for the next bubble.
How much of that do you think is actually happening?
In this, it is true that with the coming of Obama, the American US government seems to be a little more proactive and progressive, if you want to put it on this count. On the other hand, in Europe, particularly Germany, but also France, the government seems to be more conservative. But then there are other economies, like China, we know has it's got a fiscal stimulus over the next 3 years of something like $550+ billion. So there is, it's still, and of course the Japanese are putting a lot of money. So it is still unevenly distributed, but there is growing pressure on governments. And as unemployment rates rise, as people come to the streets, as you saw happen in Europe just a couple of days ago, they would be forced to do this.
To what extent is the efforts at stimulating the real economy hampered by the current state of play in the banking system, where credit is not yet flowing out into the real economy? What really is the connection between these two in today's state of play?
Well, supposing, let's say, the United States spends a lot of money, but it suddenly finds that it's spending a lot of money, but the benefits are seeping out to China or Japan or Southeast Asia or God knows where, maybe Germany. Then there would be two questions. I mean, one is, should they go protectionist, or the other would be to say that, listen, we then have to sit together and work it out so that everybody benefits. It's not that I do the spending and you get the benefit. And I think that is a problem, because we know that there are global imbalances, right, that there are structural features in which there were surpluses in a few countries and deficits, particularly a massive deficit in the United States. Now, how are we going to overcome that structural thing if we want a globally coordinated move? And I think that is an unresolved question still.
We've already started seeing the beginnings of some of these problems in the US in particular, with AIG, with General Motors.
Yep.
There are many senses in which perhaps GM and AIG are not in that sense truly American companies.
Yeah, sure,
So
sure.
you pump money into these companies, but you find the money in GM's case going to Brazil, or in AIG going to Europe,
Yeah, sure, sure.
etc. So
Yeah.
you'll start seeing some of that. But is the problem also that while governments, particularly in the US and in Europe, are expecting the financial sector funds to start flowing into the economy, not sufficient state funds are flowing into the economy yet? Is that a bottleneck?
Well, it is beginning, but I think what is happening is, even as it is unfolding, and as I said, it's very unevenly distributed globally. The problem is that the cry for protection in countries which, because people are saying that, listen, we are not getting enough of the benefits.
Right.
You are spending, all right, but we are not getting, enough of the benefits. And that's why this whole, introducing buy local clauses into legislation which
Higher local
passes,
labor.
yeah, and rethink your attitude to H1B workers and so on. All of this is, I think, a kind of protectionism, to the extent that we don't want excessive protection and any move towards greater autarky, if you want. We should have a restructured global negotiating table with voices of very different forces heard, and people knowing, say, if China is going to make some concessions, it should know that it's going to be rewarded for those concessions, rather than merely being a loser in order to prop up the United States.
Correct me if I'm wrong, but part of the response from China, for example, which, as we know, has a very healthy positive growth rate even in these times, has been to invest rather heavily, particularly in the less developed areas of China, precisely in order to, as you suggest, boost the domestic economy and make that more of a foundation than trade. So do you think part of the solution, if you like, to the current crisis would lie in larger economies like China or India strengthening their own domestic base as a motor which would drive economic recovery?
Well, I would say yes. Let me put it this way. I'd say that three elements. One, we should move out of a world in which increasingly people were trying to grow at high rates, exploiting markets elsewhere in the world outside. That is, there must be a greater focus on building the domestic market, which requires greater egalitarianism in many countries. The second is, I think, there is a possibility of, particularly of countries like China, lesser extent India, but to think of using part of their surpluses in a form of a sort of Southern Marshall Plan, in which they try and help the least developed countries, the African economies, the poorer Asian countries and so on, to pull them up along with themselves, so that there is no great unevenness which comes once this process starts. And the third is, I think, America should stop behaving as if just because it is the country which is home to the world's reserve currency, the currency which is as good as gold, that it does not have a budget constraint, that it can just keep spending, including on wars and policing the world, and people would just take the dollar and hold it. That may increasingly, if these three shifts occur, we might be taking the first steps towards a kind of global coordination where people are more self-reliant, our nations are more self-reliant, but the world together is able to grow.
There's been some talk about this crisis having once and for all ended a unipolar system gravitating around the United States. Do you think that's really happening, or is that a premature conclusion?
Well, the interesting thing is that in the midst of this crisis, which after all was triggered in the United States, what we are beginning to see is that the strength which the euro, for example, or the pound had gained vis-a-vis the dollar is being lost. In fact, after a certain period of depreciation of the dollar, now we are seeing that the dollar has become the safe haven for everybody. They are moving their funds there, which makes one think that the confidence in a currency does not come out of the economic strength and competitiveness of an economy anymore, as used to be true of the old hegemony. It really comes from the fact of military might and the fact that the United States is the policeman of the world. And if that be the case, unless there is a restructuring of power in a larger sense, rather than merely an economic competitiveness, I'm not so sure that the transition which you speak of will occur.
Thank you very much.